Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe. And as always, make sure you check out my website, daytradingfearless.com, for S&P E-mini future trade zones, and also my Patreon page to follow along with my portfolio, which is at patreon.com/daytradingfearless. But as always, let's jump right into it. So this is one of the most awesome Fibonacci strategies, and I think if you could really learn this one strategy, you could take your trading to all new levels. Okay, I think it's very pretty much a very amazing strategy that works on any chart, any time frame. And I'm going to show you a bunch of examples and also give you kind of tips and tricks. This is going to be part one of a two-part series of this strategy. So let's jump right into it. So the first thing is you want your Fibonacci's to look like this. If you're using Thinkorswim, okay, you want to only show the 0.382, the 0.618, the 0.7, okay, 70, and then the 1, which is 100%. Okay, and as you could see, I like to have mine as yellow, red, and then just the 38.2 is the blue, right? Now, what I'll do is I'll explain what the strategy is. Now, I just have a basic chart, nothing special, just a 200 EMA moving average, and then also a RSI. Default, nothing special. It's just to let me see divergences and things like that, overbought, oversold. So if you've kind of been watching my videos over the last few weeks, I've been talking about how to spot the trend, right? Well, if you haven't, make sure you go check out that video. But this is what one of the things you want to see is, are we in an uptrend or are we in a downtrend? And we're just going to look at a 1 minute chart. And you could see right here, right, we're in the downtrend. We make a high, a low, a lower high, lower low, lower high, lower low, lower high, lower low, and then price reverses, right? Because we take out that high. And just think of it, if you guys have been following my videos for a while, the waterfall trade, right? Price is in a downtrend when we kind of keep making lower highs, but once one candle breaks above its previous high, we're now in an uptrend. The same exact thing goes along with this, right? So let's kind of look at this area. A high, a low, a lower high, a lower low, a lower high, lower low, lower high, lower low, right? And then we make new lows, lower high, lower low, and then this price action finally breaks above this previous high right here. And if you look, we now are making a low, a high. Here's the pullback. The minute we take out that high right here, this is a higher low. So we have a low, a higher low, higher high, right? And then if you look, we kind of take out this low finally, and on a very small micro, we now start to reverse, but on the bigger, we're still making higher highs, right? Until it either breaks below this major low or the high. And then what you have is a new low, break, take out that low, right? And then it got whippy, and then this was kind of right at the open, and then it took out the high. So this now, when we take out all that price action, we know we're in a higher high, right? So what we're going to look for is on this pullback, we're going to draw, right, our Fibonacci. So we're going to go from this low, and let's say this is all we really see, right? if I could get this right, this is all we see. So all we're really waiting for is a rollover, right? If you guys watch my videos, I talk about the fish hook where, okay, cool, we're rolling over. If you just took a basic trend line, drew it, we're on the other side. That's all the fish hook really is, and you'll be able to identify it. So what I'm going to do is grab my Fibonacci retracement, go from the low to the high, okay, and we're going to look for a pullback into the 61.8 to the 70%, okay? This is where we want to get long, and I'll give you a couple examples how you could play that. You could say, hey, if I'm going to trade maybe 500 shares total, right? Because you've done your risk analysis or whatever it is, like how much you're going to lose dollar-wise and break it down into shares. And if that gives you 500 shares, maybe you sit there and you go, hey, let me buy 100 shares here at the 618 level. Okay, because if it does bounce, at least I'm in. And then I'll add to the 70 level. Okay, so with the 70 level, maybe you add 200 more shares, right? So if you think about it, you have this much risk, and your stop will go below, a couple pennies below the 100, because we should not take out that low on the bigger trend. Okay, so our first entry would be here, our second would be here, and then the third entry, I would look where, if price did keep falling, where would my next major support level be? I would probably look at either this wick or this body. Somewhere inside here, I would add my final 200 shares. Okay, so I'll just kind of say we'll go 100 there. Right here, we'll just kind of put it there. We will add another 100 or 200 shares here, and maybe we would get our final 200 shares there, which would equal our 500. And so price will start to roll over. Okay, let's see this in real time. Boom. So price comes right to our 61.8. We're now filled on 100 shares, okay? Now, our target is this 38.2. Now, we don't know if in a perfect world, we want price to come, pick up these shares in reverse, and then go to our 38.2. But that is our ultimate target to sell everything. Okay, so let's see what price does. It kind of bounces. Okay, gotta be a little patient, wait for it, and boom, there's our target. Okay. That is our target, and we are all out. Now, some people like to scale out and maybe look for the bigger move. That's all up to you. Everybody's trading preference is different, because if you think about it, you could have taken some off here, some off here, some off here, maybe move your stop just above to your break even or right below your break even. Things like that, okay? So that is one way, but look at this. If you actually held, you could have had a nice big winner. For me, I'm happy to just take all my cash, my targets hit at 38 and move on from there. But if you want to play the scale out game, you can always just keep ratcheting up your stop and maybe look for new highs too, okay? So I hope that helps. Now, a couple things that I kind of look for, I will describe in my next video, okay? So you guys are going to have to come back and watch, which are going to be little telltale signs of things like that, okay? But let's kind of go over a couple more examples in this video of just how well this works. So remember back here where we kind of were looking at this downtrend and then we broke. Well, when we saw this break right here, the new high, we know there's probably going to be a pullback. Well, if we grab our Fibonacci, go from here, this low, to this high, okay, and we see the pullback, look at that, right to our 61.8, almost to the 70, but that, remember, 61.8 to 70 is our buy zone, and then right back up to the 38 target hit. Okay, if we want to kind of zoom in, and as we make this new high right here, let's go from just this low all the way up, okay, to this high, pull back. We just barely missed the 38, okay, or the 61 bounce. Come down, you would have been filled here, here, and look at this. Maybe you would have had your third fill here, and then a bounce, and then the push right back to your 38. I can't make this stuff up, guys. I hope this helps. I hope there's something that just kind of clicks with you guys. I know my buddy Kieran over in Ireland, I've been teaching him this strategy, and it's hopefully been a light bulb moment for him to where he's like, wow, it just works over and over and over. Okay, so again, here's our pullback. We're kind of now in the downtrend, right? Boom, boom, lower highs. We finally break above on this little micro move, break above, pull back, new high. If we grab our fib and just go to this high and look at the pullback, right back to our 61.8 and right back up. You're in and out of the trade all within the same minute, pretty much. So you have to have resting orders because you never know when you'll get that spike. But this is part one of a part two series. So make sure to watch my next video, part two of this strategy, where I'm going to kind of help you guys really identify telltale signals of when to enter, when not to, because there are some market structure things you have to also learn. So as always, thank you for watching. And until next time, we'll talk to you soon.